All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're seeing lots of news in the market right now. Okay, we're actually seeing U.S. stocks and Treasury yields gain as CPI cements a Fed pause. We're seeing U.S. second quarter GDP growth revised lower. And, there's a lot of talk about the past and future effects of the recent monetary policy tightening. And the rising gas prices are a big deal for families. All right, that's kind of where we saw a lot of the jump up in inflation here recently was actually from gas and energy, which is something that I basically said was going to happen in the September CPI. I've been saying that over the past like month or two. And that's what we're seeing right now in the market, right? We're going to break down TLT. It is squeezing super hard, right? Squeezing a lot. I mean, if you look at the Bollinger Bands, they haven't squeezed this hard in a very long time. All right, we're going to go over the possible bullish scenario. We're going to go over the bearish scenario. We also need to look at the US dollar, guys. I've been mentioning this. You really need to pay attention to the dollar right now. We'll take a look at how it compares to treasuries. All right, we'll take a look at how it compares to the stock market. I do want to mention that I started a completely free newsletter for you guys. It's really good stuff in there. Okay, there's free trade ideas as well. This is an example of the Tesla trade and the trade idea that was sent out in the newsletter a few weeks ago, like 2-3 weeks ago. And you can see, people were making very large profits, right? Tesla ran up, like 30, 40, 50 bucks after that trade idea that was sent out to you guys in the newsletter. So be sure to subscribe to that, okay? It's not spam. I'm not going to spam you guys with a bunch of junk or a ton of affiliate links and all of these other different things. Just really good investment intelligence as well as free trade ideas. And if you guys are fans of free valuable content, I think you'll really enjoy it. I do also want to mention I started a Ko-Fi page. Now, Ko-Fi is basically just a way for you guys to reach out. You can come on here and you can actually book a training session, a coaching session. If you guys are interested, you can do that directly through the platform. Also, if you enjoy these videos and you ever just want to give a tip or anything, they have the cool little buy a coffee feature. And so you can come on here and basically buy a coffee. You can also request YouTube videos, right? So if you have a specific video, I've done a lot of viewer requests, over the length of this channel. And now that it's starting to grow a little bit more, I am doing request a video on here. It's $6.99, so it's not like it's some huge fee or anything, or like I'm making a ton of money by doing these viewer requests. But it's just a way to you guys get a specific topic covered a specific way that you want, and you can do that via the Ko-Fi. Okay. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. And before we get into the charts, there's some stuff that I want to go over, right? And if we take a look, manufacturing activity is at recessionary levels. Right. And that's what we're taking a look at right here. The ISM manufacturing PMI. All right. And, this is something to be cautious of right now. The stock market does not always tank just because there's a recession. There's often times where the stock market has been, bullish during a recession, because the big thing about recessions is you don't realize you're in a recession until after it's happened. Right. And so for the past year, really almost the past 2 years, everyone's been screaming about the coming recession. And there are lots of signs, not only the yield curve, but if you take a look at this right here, manufacturing activity is also at recessionary levels. Nice chart here from Game of Trades. We have global liquidity right here. Okay, this is something that I'd like to pay a lot of attention to, especially US and basically the Fed liquidity. But what we're seeing right here is global liquidity is being drained, right? World liquidity is basically going down right now. Okay, it's down to $4 trillion. It's gone down over $4 trillion. That's not insignificant, right? That's something actually worth noting about. And it's not a good sign, right, for the overall global economy. And a large portion of this is really just giving back some of the massive global liquidity that was pumped into the world right around COVID, right, because of the COVID stimulus, a lot of the stimulus that went out into the world. Now, we talked about the dollar. Okay, this is a dollar seasonality chart, right? And so we have the different months down here, and you can see that the dollar actually seems pretty bullish from August heading into November. Okay, now that's something that we need to pay attention to. Remember, this is just a seasonality chart. This is not something to live or die by. It's not a guaranteed predictor of what equities or currencies or anything are going to do. But it's very interesting, right? And it suggests that in the middle of September, we could see a drop here in the dollar, but after the middle of September, which, we're approaching right now, we actually see the dollar continue to show strength up leading into November, which brings us to our US dollar chart right here. Okay. What we're looking at is going to be the Dixie DXY. All right. And, we can see that there's this old zone, right? It's very simple stuff, simple concepts. All right. Old resistance becomes new support, and then it's resistance. And now the question is this going to be resistance again, right? These areas are areas of liquidity. And so, in the past, most recently, it was supply. All right. Supply here, supply here. This is how markets work, right? There's supply and demand. That's what support and resistance is basically. And there's an imbalance of sell orders here, an imbalance of supply pushing price lower, imbalance here, pushing price lower. We came back into that zone very briefly again, imbalance of supply, imbalance of sell orders, pushing price lower. The big question now is all of this overhead supply being replaced, right? Because you have to think the orders are filling here, right? Orders are filling here, orders are filling here. Now that we're approaching those areas, are all of the orders filled, right? Is all of the supply orders filled, or are people still, basically replenishing and replacing those sell orders up at this level? Is a question you want to ask. Or is there still an imbalance here that's going to continue pushing price lower? The more times you test the level, an area of liquidity, the weaker it's going to get, right? And so basically what we're getting at here is that if all of the supply, that's been pushing it down has been erased, okay, and there's not enough supply in there, it will actually turn into a demand imbalance, right? And you can see we're actually consolidating and testing the lower end of that region right now. And so if we consolidate in here, this means that the market is in agreement, right? Buyers and sellers, supply and demand is in agreement, and it's not going to move until we get the next imbalance, right? And that's either going to be demand pushing price higher, or it's going to be supply pushing price lower. So we can't always predict the markets. Okay. What we can do is we can react. Okay. And so this is a good time to be patient, watch, and then react to what price action is telling you, right? Currently we're consolidating in here, and we're going to get the next move. Okay. It's not going to be quick. It's not going to happen overnight. But this is something you want to pay attention to and see how it develops. So that way you can use this as an edge to help you prepare for, market volatility in some of your potential trades, right? A good example of this, if you just take a look at the US dollar versus the S&P 500, so we have the Dixie here in white and we have the S&P here in orange, you can see the clear inverse correlation basically, right? As we see, the dollar rising here, what is the stock market doing? Well, the stock market's dropping, right? And we see right around the same area here, okay, basically right around here, we see that the dollar peaks, okay, and the stock market bottoms. This is the October lows of the market here. And what do we see? Well, we see the stock market rallying, and we see the dollar following or falling, right? Now, most recently, the dollar seems to have broken out of a long-term downtrend, right? Basically from those October, September highs, the dollar has actually broken out now to the upside. And as a result, what are we seeing? Well, we're seeing that, basically from this area here where the stock market's going up, we're seeing that, the dollar is going up. We're seeing the stock market make these lower highs. So if the dollar continues to rally, that's something that's going to be a headwind for stocks, right? If this continues to go higher, it's very possible that stocks can continue to go lower. Now, that's not, always going to play out exactly, okay? You can see there are similar times where the stock market's rallying here and the dollar's rallying. So, as I mentioned before, these aren't things to live or die by. Like, just because the dollar is going up doesn't mean that the stock market can't go up. But when you take a look at the, the overall trend in correlation with them, you see that it's normally inverse, right? So this is something that you want to pay attention to for the rest of the year, honestly, and see how this develops. And then you want to pay attention to that regular dollar chart and see, do we go to the upside? Do we go to the downside from here? All right. This is the dollar versus treasuries, right? So we have TLT here in orange. And you can see it's a very similar, relationship, right? Where the dollar is going up, treasuries are going down here. But treasuries haven't had a strong rebound, right? You can see that both of these charts really are just consolidating, and the dollar here started to make a little bit of a downtrend, and then TLT in bonds tried to make an uptrend. But right around this area here is really where we started to see things break, right? And we kind of have seen that relationship, break a little bit. And we're seeing that, the dollar's rising here, right? Treasuries are still going down. More recently, though, if we take a look here, we can see that both of them are rallying kind of at the same time. TLT and the dollar are both rallying. And so, we basically want to ask ourselves, all right, well, hey, is this correlation going to continue playing out where both of them are trading the exact same, right? We know oftentimes that that's not the case, right? We know that when TLT is going up, usually the dollar is going down. All right, and right now we're getting a scenario where both of them going up. So does this mean that the dollar is due for a pullback, right? Or could it mean that TLT is due for a pullback based on the performance with the dollar? Right now, when we talk about TLT, we have something simple on here known as the Bollinger Bands. That's what these three lines are. These are going to be very useful, and it's squeezing right now, right? You see how they squeeze and then they pop, right? This is an area here where they pop, right? Bollinger Bands have popped, and then they start to squeeze back again, and then what do? They expand and they pop, right? And so we're at this area now where TLT has really moved nowhere, almost essentially for kind of the month of September. Right, it's really just been sideways range bound in this area. And when we take a look at our Bollinger Bands, it's squeezing very hard. So there's going to be a big move coming soon in TLT, right? It could be to the upside, it could be to the downside. Let's dive into the charts a little bit more so we can come up with, where we think it's coming based on what the chart's telling us. Now, what we have here is a simple bullish scenario. This is one of my favorite chart patterns. It's called a bump and run. And in this case, it's an inverse bump and run. So you see, we have a prevailing downtrend, right? That's what you look for, right? Prevailing downtrend. And then we have an aggressive bump down in price, right? And so now we have this aggressive bump down. And this is where your run is, right? So we have the bump down, and now we're looking to see if this is potentially going to run, okay? And what the pattern would do was it would take you up towards the top trend line, and then you would break out from that top trend line and head upwards. And this would potentially take us to our gap fills, right? We have a gap here to fill. We also have another gap here to fill, right? These are gaps on the chart for TLT. These gaps, they tend to fill about 90% of the time. We also have a small one right up here that we're very close to. Okay. And this is going to be basically your bullish scenario, taking TLT back up to the 98, 99, even $100 price area. Okay. Based off of that big squeeze, right? We're seeing that really big squeeze. It's very possible we could rally to the upside. Now, the bearish scenario here is basically going to be TLT breaking below $90 and breaking below our, previous lows here from October of last year. And the way I came up with this is basically just some Elliott wave. Okay, so we have a wave one down, two up. Let me try to find a better color right here. So one down, two up, and then this is our wave three. Okay, and then wave four, we had the little rally up here for our wave four. Wave five would take us to $89.20. Now, it's been doing a good job of holding support, right? 93.22 is a big level, as well as 92.30, right? 92.30, you can see that's where we came in and put the abandoned baby, and we had our rally. But that's basically what we need to be cautious of right now. And something that leads me to believe that we could actually get this 5-wave scenario, is basically just this wave three right here, right? So to me, this isn't 1, 2, 3, 4, 5 or whatever, right? Wave three is typically your biggest and largest wave, and it should be a 5-wave impulsive move. And what do we have? 1, 2, 3, 4, 5 for our wave three. Okay, so that's kind of what I'm looking at right here. And that's, basically going to be, again, our bearish scenario. Now, again, there's lots of support levels. We have 93.22, 92.30. All right. Price action is really squeezing right now. We went over that. You could call this a bear flag if you wanted to, right? So here's your flagpole, and then here's the flag itself. And it's very possible that we have a breakdown that would also take us right around to those wave 5 targets. Okay, so that's something we need to be cautious of. And basically that would just mean that treasury yields are going higher, right? And so if yields continue to rise, it's very possible that TLT is going to go down, right? Now, something to pay attention to help look at yields is also going to be, besides the dollar, is also going to be energy. Okay, energy tends to move with treasury yields. And I've got a really good video that you guys should watch right here. Okay. Click on the upper right hand corner. That's where, you can get my breakdown of energy. We go over the relationship, between energy and treasury yields, as well as the relationship between energy and tech and energy in the S&P 500 right now. There's some amazing charts there, some amazing data that you don't want to miss that I've been showing. And, it's been a little while. It's been a month or two since I've gone over some of those charts. So I just want to give you guys an update. All right. Don't forget to sign up for the completely free newsletter. All right. You can get those emails directly straight to your inbox. All right, I'm sending out multiple emails every week, trying to get a good schedule for it, right? I don't necessarily have a particular schedule, but, they are being sent out during the weekdays, and then occasionally, I'll send one out on the weekend. Good way to support the channel. Also to get some of these free trade ideas, right? Up 600% on a Tesla call option, 175% on a Tesla call option. And, these are basically coming from, the trade idea. I break down, what it is we're looking at. All right. And don't forget, if you ever want to book a one-on-one coaching session, all right, you can do that through Ko-Fi. You can also do, donations on there. You can buy me a coffee, it says. If you guys are ever interested in supporting the channel and just kind of saying thank you for the free content I'm putting out there, and if you want a specific video tailored to your needs, right, going over a specific topic that you would like, you can also come in here and request a YouTube video just for a small fee. It's only like $6.99. So that's it for today's video. Smash the like button, subscribe to the channel. I'll see you next time.